who the hell's got the kind of bread to take possession of 19 million ounces of silver? And this is something that continues to go unnoticed by the mainstream. And how about gold, right? 4,142 contracts stood for delivery just a couple of days ago, the beginning of the September contract. That's the highest delivery we've seen in 2.5 years. That's 12.9 tons of gold. So the world, the central banks of the world and the sovereign wealth funds are using the way that the West suppresses gold, thank you very much, to stand for delivery, which speaks to the bullishness. And when you put all of this together, Chris, and see the price keeps going higher and the demand for delivery keeps going higher at the same time.
With 19 million ounces of silver and 12.9 tons of gold being quietly taken off the market in just one day, it's clear something big is happening behind the scenes. As Andy Schectman explains, the most sophisticated investors are emptying the shelves, while the U.S. economy remains distracted by mainstream media's focus on flashy stocks like Nvidia and Bitcoin. Gold has surged 830% since 2000, and yet it's still being called a barbarous relic by many. But what if the real story is that the U.S. dollar is quietly crumbling and no one is noticing? The central banks know it, and they're stocking up on precious metals while most Americans sleep. This could be the early warning of massive insolvency across the U.S. economy.
Yeah, well, I mean, let's start with gold's performance, and I think it's one of these deals, Chris, where people just miss it. They miss the fact that it's like, the old story when we were kids, the tortoise and the hare. And the hare is the sexy thing. It's Nvidia, it's Bitcoin, it's Apple, it's things that get mainstream media attention. It's things that move in a way that, I've been doing this for 35 years almost. And Richard Russell was a hero and a mentor of mine, brilliant man. And I read him every day for over 2 decades. And he would say, if you make 7% per year, you are a rock star. And this is a man who at the time had been writing a daily newsletter for going on 60 years. This guy that was just brilliant. And I think when we look at market psychology over the past several years, it's the get rich quick mentality. It's why casinos keep springing up in Vegas. It's I can do this. Look at what they did with Bitcoin and Nvidia and Apple. And yeah, those are really impressive gains, but they're the outliers. In fact, like if you look at something like the Russell 2000, which is a broad measure of the economy, most of those stocks are down. If you would have bought a whole big swath, call it 20 NASDAQ stocks without taking Nvidia or Apple, you'd be down since the beginning of the year. So it's just a handful of stocks that are leading the way right now. But when we talk about on a broader perspective, most people would say, well, gold, it's a barbarous relic. It doesn't pay any interest. What the hell would we want that for? If we go back to January 1st of 2000, Chris, gold was $274 an ounce, and now it's 2,520. That's a gain of 830% or so. You take a look at silver on January 1st, 2000, it was $5.30. And, with it just under 30%, that's almost a 500% gain. And it's done so very quietly without the fanfare. Gold has outpaced every major asset class with the exception of Bitcoin since the beginning of the century. The S&P 500 with dividends reinvested has averaged about 9.6% per year compounding, where gold's 9.9%. And so when you talk about the slow growth of gold that goes unnoticed, it's amazing. I mean, and a lot of it has to do with price and rhetoric suppression on the Western markets where people don't notice it. But indeed, there has been really nothing in traditional assets that rivals gold. It's doubled the performance of the 10-year Treasury. At the same time, the part of the 60-40 portfolio, that 40% that's supposed to be, so safe when we talk about, just what does that mean? And really, it hasn't been that safe. And when we talk about where we are now, it's continuing to happen. You got gold up right now about 8% up through the summer here. and you annualize that, for the summer, it's a 30% plus pace. And I think people don't understand that. I don't remember in my career a summer that's been as bullish for gold as this one has been. In fact, you're talking about, for the past this entire summer, you look at the gold futures positioning, it's been a really bearish, with the commercial banks shorting, and on the short side of the trade massively all summer long. You see the American stock investor who has been enthralled with AI and selling their exposure to precious metals. You've seen a strong dollar and positive real yields, and all of that together, this has been gold's fifth best summer performance in the past quarter century. And so this is a big deal. I mean, and people are not noticing it. In the past 25 years, there's only been 4 other summers where we've seen anything that even rivals what we're seeing right now. And I think it's one of these deals that the longer it goes unnoticed, the more bullish it becomes. And when you take a look at look, for the first time ever, a 400-ounce gold bar is over $1 million. But let's put that in perspective. In 1971, that 400-ounce gold bar would be $14,000. In 2000, it would be $115,000, and today it's $1 million. And in 1971, that $1 million, or $14,000, was 400 ounces. In 2000, it was 49 ounces. And today it's 6 ounces for $14,000, the cost of that 400-ounce bar in 1971. And so when you talk about, is it gold that's gone higher, or is it the dollar that's gone lower? And we'll put that in context again. Return over the past 4 years, the 60-40 part, the U.S. Treasury, on average, is the 30-year Treasury is down 40% over the last 4 years because of rising interest rates, versus commodities such as gold and silver, just the entire commodity index, up 120%. And so it's a situation where things are beginning to change. And I think that is something we notice in the central bank acquisition of gold and silver. And that is no better evidence than through the deliveries off of COMEX. In terms of silver, the deliveries just 3 days ago, amounted to 3,830 silver contracts, or 19,150,000 ounces. And, that's about as big of a delivery as we've seen in a very long time. Who the hell's got the kind of bread to take possession of 19 million ounces of silver? And this is something that continues to go unnoticed by the mainstream. And how about gold, right? 4,142 contracts stood for delivery just a couple of days ago, the beginning of the September contract. That's the highest delivery we've seen in 2.5 years. That's 12.9 tons of gold. So the world, the central banks of the world and the sovereign wealth funds are using the way that the West suppresses gold, thank you very much, to stand for delivery, which speaks to the bullishness. And when you put all of this together, Chris, and see the price keeps going higher, and the demand for delivery keeps going higher, at the same time, according to all these facts, the American investor is asleep at the switch. They have been selling. You look at the ETF participation falling at a 45-degree angle, positive real yield, if we believe the nonsense coming out of the Bureau of Labor Statistics when measuring inflation versus the yield on the, let's say, even the 2-year Treasury, and a strong dollar. That should be the death knell for gold, and yet it continues to go higher and higher and higher. And the demand for delivery to remove counterparty risk keeps getting stronger and stronger and stronger. And this is one of these deals where the big money, the ones who write the script, know the playbook. This is under the cover of the Western stupidity, and the media, who doesn't tell us anything, is emptying the shelves. As you can see, massive deliveries, 19 million ounces of silver delivered in one day, and 12.9 tons of gold in one day. Who's got this kind of bread? Where's it going? And these are things people need to start and think about as we watch the Western shelves being emptied by the most sophisticated investors on the planet. Look at it in terms of Japanese yen. That's the best way to underscore what you just said, right? So 10 years ago, an ounce of gold in yen was somewhere in the neighborhood of 140,000 yen, and today it's in the neighborhood of 360,000 yen. So did gold triple in Japanese yen, or did the yen fall? And it didn't fall. And it's that the currency from which we measure it fell. So the yen got weaker and gold just hung there. And that's the most important thing to understand, is that gold did what it's supposed to do in yen, and it preserved its purchasing power as the yen from with underneath it, in which it was being valued in yen, got clobbered. And that's the same thing we see in that chart that I read to you. Again, in 1971, $14,000 worth of gold was 400 ounces. In 2000, it was 49 ounces. And today it's 6 ounces. So did gold go higher, or did the dollar that measures that $14,000 worth of gold get its ass kicked? Even though you weren't allowed to own gold until 1974, let's just pretend that you could. Well, let's buy Andy 400 ounces of gold and stick it under the mattress, earning no interest. That's 14,000 bucks. It'll earn no interest, and here we are, 55 years later, nearly 54 years later, with nothing but dust earned on that gold. And that $14,000 worth of gold, those 400 ounces, is worth $1 million. Now, was it the price of gold that went up, or did the dollar go down? And just think about what $100 is worth in 1971 versus what it's worth today. And these are the things that people need to understand. And what you said there couldn't be more true.
That wraps up today's discussion on the massive, behind-the-scenes moves happening in the gold and silver markets. As Andy Schectman highlighted, while the media focuses on flashy stocks, sophisticated investors are quietly accumulating millions of ounces of precious metals. With gold up 830% since 2000 and central banks driving up demand, it's clear something big is brewing. The US dollar may be weakening faster than we realize, and the shelves are being emptied. Thanks so much for watching. If you found today's video insightful, make sure to give it a thumbs up, and don't forget to subscribe so you don't miss future updates.